Today on the Resource Equation, we explore the remarkable surge in Novo Nordisk shares following the recent FDA approval of its oral weight loss pill, Wegovy. On December 22, 2025, the U.S. Food and Drug Administration granted approval for Wegovy, marking a groundbreaking milestone as it becomes the first oral GLP-1 medication to receive such authorization globally. The immediate market reaction was notable, with shares of Novo Nordisk AS, traded on the New York Stock Exchange under the ticker symbol NVO, skyrocketing by 7.36% during pre-market trading on December 23rd. This surge underscores a robust investor response to the approval, which is poised to fortify the company's competitive position in the burgeoning obesity drug sector. The approval of Wegovy is particularly significant as it positions Novo Nordisk ahead of its primary rival, Eli Lilly, in the escalating race for effective weight loss treatments. The oral formulation of Wegovy will be available in pharmacies and through select telehealth providers starting in early January 2026, priced at $149 per month. This pricing strategy, which includes an agreement with the Trump administration, allows patients without insurance coverage to access the medication at the same rate, thereby broadening its accessibility to a wider audience. This development is especially timely as the global obesity crisis continues to rise, with the World Health Organization reporting that as of 2022, over 650 million adults worldwide were classified as obese. This approval comes at a pivotal moment for Novo Nordisk, which has faced a myriad of challenges throughout the year, including supply chain disruptions and fierce competition from lower-cost alternatives. The approval of Wegovy represents a crucial opportunity for the company to regain momentum and renew market interest. Analysts interpret this approval as a first-mover advantage, particularly in a segment where patient preference for oral medications could significantly drive demand. The oral pill's convenience may attract a broader demographic, especially among those hesitant to use injections. Market reactions have further highlighted the importance of this approval. On the same day that Novo Nordisk's shares surged, shares of Eli Lilly fell by 1.2% in U.S. pre-market trading, reflecting a potential shift in investor sentiment as Novo Nordisk begins to gain traction. The competitive landscape is intensifying, and the approval of Wegovy aligns with broader trends in the pharmaceutical industry, where there is increasing attention on weight loss treatments. Analysts note that the obesity treatment market is projected to reach $100 billion by 2030, driven by rising obesity rates and an increasing focus on health and wellness. However, uncertainties linger regarding the sustainability of Novo Nordisk's market position. While the approval of Wegovy is undoubtedly a significant win, analysts caution that the momentum may be fleeting. Eli Lilly is anticipated to seek approval for its own oral weight loss medication, orforglipron, in 2026, which could intensify competition in an already rapidly evolving market. Furthermore, companies like Roche and AstraZeneca are also testing similar oral formulations, indicating that the race for market share in obesity treatments is far from over. Additionally, Novo Nordisk's stock performance over the past year has been mixed, despite the recent surge. Year to date, the company's shares have declined by approximately 45%, reflecting investor concerns over earlier setbacks, including disappointing results from the redefined Phase 3 trial of another product, CagriSema. These setbacks have led to multiple downward revisions in the company's sales growth guidance for 2025, contributing to a cautious outlook among investors. Such fluctuations highlight the volatile nature of the pharmaceutical market, where regulatory approvals and clinical trial results can dramatically impact stock performance. Looking ahead, analysts are closely monitoring the launch of Wegovy and the company's ability to meet market demand. Novo Nordisk's CEO, Mike Doustar, has expressed confidence in the company's preparedness for this launch, asserting that they have more than enough pills this time to meet anticipated demand. This launch will be critical in determining whether Novo can effectively capitalize on its first-mover advantage and reclaim market share from its competitors. The company's proactive approach in addressing previous supply chain issues demonstrates a commitment to ensuring that this launch does not encounter the same pitfalls as the initial rollout of Wegovy in injection form in 2020. The broader market implications of the approval of oral Wegovy could also expand access to weight loss treatments, addressing patient hesitancy associated with injections. This is particularly relevant as many individuals prefer the convenience of a pill over injections, which can be intimidating for some patients. However, some analysts have raised questions about the efficacy of oral medications compared to injections, suggesting that while the approval is a positive step, it may not fully transform the treatment landscape for obesity. The ongoing dialogue among healthcare professionals about the comparative effectiveness of these treatment modalities will be crucial as patients weigh their options. While the approval of Wegovy has provided a significant boost to Novo Nordisk's stock and market position, several uncertainties remain. The competitive landscape is poised to shift further with Eli Lilly's anticipated entry into the oral medication space, and ongoing challenges related to sales growth and market dynamics could influence future performance. The delicate balance between innovation and competition will be crucial as Novo Nordisk navigates this evolving terrain. Analysts will be observing how the company adapts its strategies in response to competitive pressures and shifting consumer preferences. As we revisit the implications of the FDA approval for Novo Nordisk's competitive standing, it is clear that the landscape is rapidly changing, particularly as more players enter the market. The surge in stock price reflects immediate investor optimism, but the long-term effects of this approval will depend on how well Novo Nordisk adapts to the evolving dynamics of obesity treatments. The company's ability to maintain its market position while navigating potential challenges will be a key focus for stakeholders. Looking forward, Novo Nordisk has also submitted a marketing application for Wegovy to the European Medicines Agency and other regulatory authorities, which could further influence its market position if approved. Investors and analysts alike will be closely monitoring these developments, as they could significantly impact the broader obesity treatment market and shape the competitive landscape in the coming years. The potential for international expansion presents an exciting opportunity for Novo Nordisk to solidify its role as a leader in the obesity treatment sector. As we consider the potential ramifications of this development, the question arises: who stands to gain the most from these changes, and over what time frame? The signals to watch in the near future will include updates on Eli Lilly's progress with its oral medication and Novo Nordisk's ability to leverage its first-mover advantage effectively. The interplay between these two pharmaceutical giants will be instrumental in shaping the future of obesity treatments, as they vie for dominance in a rapidly evolving market. If you found this analysis insightful, please like, comment, and subscribe to the Resource Equation. In our next video, we will explore the implications of recent changes in healthcare policy on pharmaceutical pricing and access, providing further context to these critical developments in the industry. This video reports and explains public information and does not offer investment advice.